Let's talk about a few of the stocks which have got wings today, and those are the aviation companies. So across the board, you've got some green led by Jet Airways. The numbers were disappointing, but the stock is high by 4.5%, possibly excited about Tata's doing due diligence to acquire some stake in the company. Sonia joins us for more on that. Sonia?
Hi, thanks a lot for that. Yes, there is a possibility that the Tata group could be looking to buy a controlling stake in Jet Airways. At least that's what reports are suggesting. The fact that they have now begun the due diligence process to buy a controlling stake. The due diligence process will take over 4 to 5 weeks. Of course, these are reports doing the rounds at the moment, and CNBC TV 18 has not independently verified them. But having said that, the stock has been under a lot of pressure as well. So maybe there could be some amount of shorts that are covered in the system, because of which the stock is rallying. There's nothing in the numbers to suggest any kind of recovery at all. In fact, if you look at it, it's been the third consecutive quarter of losses that Jet Airways has posted. The revenue growth has also slowed down substantially because of a slowdown in passenger growth. Seasonal weakness has continued in this particular quarter. An EBITDA loss of almost 1,260 crores is what they've done. They've posted this time around, and a double whammy for them, a forex loss because of the weaker rupee that amounted to about 438 crores, and an 800 crore impact due to higher fuel prices. But on both of those counts, fuel prices continue to remain elevated. The rupee has weakened once again. So the expectation is that going forward as well, there won't be any major recovery in terms of earnings. The only trigger for Jet Airways is fundraising, and on that, the management, even on the call yesterday, post the results, also mentioned that they are in talks with strategic investors and will be looking to infuse funds very soon.
Okay, when? I think that's what the market is asking. Thank you, Sonia, so much for getting us the updates. That's one stock on the move. Now, the other one that's on the move on the way down is Quick Heal. In fact, even now as we speak, it's down almost 7-odd%, reacting to numbers that clearly have been fairly disappointing. So, Rima, no healing for Quick Heal yet. What's gone so wrong this time?
Well, it's disappointing numbers. And Quick Heal, remember, is the maker of antivirus, which protects your PCs, your mobiles, your tablets, as well as even for the company's software. So disappointing numbers. Now, this is a seasonal business. So we've taken a look at the September quarter revenues for the last 3 years. And you can see there has been absolutely no growth, hovering in a band of 105 to 110 crores. Even in the EBITDA, the absolute EBITDA has been at 60 crore for the last 2 years in the September quarter. And profits, in fact, have come down this quarter compared to the prior year. If you particularly drill it down to Q2 of this FY19, the receivable days have gone up to 123. And the problem is that, still 80% of their revenues come in from retail, and that's not a market which is growing that much. The big focus area of the company has been on enterprise, but they've not managed to crack it. So if you look at the contribution of enterprise as well as government, in fact, it's come down this quarter compared to the prior year, but there hasn't been a significant scale up over there, and mobile contribution, in fact, is less than 1%. So net, no healing, as you said, for Quick Heal.
Well, definitely, as of today's action is concerned, still down almost 7%. Numbers coming in from TVS Street Chakra. Okay, that's a pat fall. Profit fall of about 26%. Stock is not enthused. Not getting great numbers on the mid-cap side, at least the kind of names that we've seen today. However, one stock that is quite excited and quite cheerful in today's action is Sanya Motors. And it's not just the numbers. Basically, it's got to do with the fact that that strike, Sonia, is finally over at their Tamil Nadu plant.
Well, that's what reports suggest, that the workers have ended the strike at the Oragadam plant in Tamil Nadu. Remember, the strike has been on for the last 50 days, and apparently, now the strike has ended and work has resumed starting today. We reached out to the management. They did say that they will be giving an official confirmation to the exchanges very soon. But this is a big positive, because it had impacted production to the tune of 25,000 units in September and October, and hit their earnings as well. In fact, talking about earnings, there's been a slowdown in growth this time around. The revenue growth was just about 11-odd%. The margins have fallen. But the key reason for the revenue growth slowing down was, one, the strike at the Oragadam plant, and two, the Kerala floods. Both of which the fears have now receded. So going forward, the expectation is that things will improve. However, the company has scaled down their own full-year production targets. It now stands at 925,000 units versus 950,000 that they had estimated earlier, because of a slowdown in the demand situation. So that's the reason a lot of brokerages have also cut down their earnings and target price for the stock. However, today it is rallying on the back of the relief that it's got post the strike being called off at the Tamil Nadu plant.
Okay, thank you very much for that. Wockhardt is also sulking in trade after the US District Court invalidates the company's Zytiga patent. We spoke to Habil Khorakiwala, the founder, chairman and the group CEO of the company, and he expects a positive outcome with respect to the Zytiga generic case in the next 2 weeks. Listen in.
The hearing will begin soon and we may have the outcome of within 2 weeks, because fundamentally the patent case which we have is a very strong case, and we believe, the industry believes, that we will get a favorable decision when the hearing takes place. It's very difficult to say because another 2 weeks is there, and it will be significant, but I am not able to put a number to it at this point in time because there are a lot of uncertainties around. We expect that we will offer a plan for remediation by end of the month, end of the year, and we hope that the inspection would take place early next year.
Okay, that's Wockhardt reacting negatively. I mean, they had a decent quarter, second quarter. The stock went up yesterday, and today it's an absolute reversal of that trend. Anyhow, now let's move to a couple of banks. And actually, both of these bank stocks are under pressure. We're talking about UCO Bank and Bank of India. Abhishek is here to decode the numbers. UCO Bank with 25% gross NPA. So the story continues, Abhishek?
Well, actually, they have reported 11,300 crore of net losses for 12 quarters in a row. And that is actually denting their capital adequacy ratio. Remember that last year when the government announced the recapitalization plan, UCO Bank was the biggest beneficiary in the government's recapitalization plan. And today, the Tier 1 ratio at 5.6% is the lowest amongst Indian commercial banks which are listed. So the gross NPA continues to remain elevated, as Surbi, you pointed out. And in absolute value, it's almost flat quarter on quarter. And in percentage wise, it is at 25.4%. Coming on to Bank of India, in last 13 quarters, right from Q2 FY16 to Q2 FY19, the deposits have come down by 13,000 crores, while the advances have come down by 41,400 crore. But you look at the grave picture of slippages. Cumulative slippages have been more than 1 lakh crore in last 13 quarters, and that's about 29% of the book that is there in the balance sheet right now, or about 26% of the book in Q2 FY16. So cumulative slippages have led to cumulative loss of about 14,900 crore. The government has borne the brunt as the tax write-back is of 6,500 crore. Back to you.
For the first time after so many quarters, our upgradation and recovery has surpassed the slippages, new slippages. And going forward, since we are expecting a lot of resolutions from NCLT, and we have also uploaded many, around 10,000 crores of asset for sale. And we have started new OTS scheme, board-approved OTS scheme under Mission Samadhan. So we are expecting a lot of recoveries coming in the Q3, and it will be good for Bank of India. NCLT, around 2,000 to 3,000 crores we are expecting in Q3. We have reduced our RWA by 31,000 crores. And which has helped to grow in retail around 19%. And our, if you see the advances, domestic advances has grown 10% over last year. That we have managed by reducing our RWA and composition of asset and light capital consuming asset. That strategy has worked well for Bank of India. And as on today, we are 7.53 CET1. Of course, we have not received any capital from government this year, and we are expecting capital from government any time also.
Okay, Nalco has also reported good numbers. It came in higher than estimates, but the stock is down 4%. We spoke to TK Chan, the CMD of Nalco. He expects alumina prices to trend in the range of $430 to $480 per ton. Hear him out.
Right now, alumina market prices, there are no abnormalities are there, and market is quite normal, driven by normal demand and supply. And since Chinese smelters and ex-China smelters, they are having inventories, so naturally the prices have moderated. So we expect that alumina prices may be hovering around between 430 to 480. Our first quarter average realization was 555. Second quarter it is 524. And this quarter we are expecting that realization will come down because up to now realization is around 509. And we have to see that what kind of price are coming after this 488.
Yep, explains why the stock is down 4.5%. Second quarter was great, but the fact is that alumina prices are now lower as we're looking at Q3 and Q4. Let's take a quick break on that note. We will